Good evening. This is Dwayne Lowry for the DPP Grain Desk on Sunday, December 15th. It's currently 2:23 in the afternoon. The outlook tonight, I think, is rather simple. I think we're going to have a weaker bias as a general tone all week. I think it's reasonable that we could trade on both sides tonight early this week. That's not an unreasonable expectation. But if we look at how much of a recovery we can get, it's not going to be a lot. Part of the problem is we don't have much for news. What we do have for news, you've got a backdrop of South American weather that's generally favorable, acceptable. There's no real concerns. You look at the 2-week forecast, we don't have a concern there. We just got done with USDA reports. There's not a bullish story there. The next USDA reports that come out in January, everybody already expects them to be, unchanged or higher in U.S. production. So you just got more bearish news coming there. The argument can be made that it's known. I think that's a legitimate argument, but if that were the reason to expect a rally, that would have been a good opportunity to have a rally over the last couple of weeks. We did get some recovery. We had a nice rally in beans over the last few weeks. We had a 20-some cent rally in corn. That was a poor and weak and feeble rally, and I think that window of opportunity to extend that rally to have a bigger rally is closing fast, and if there was any doubt about that, there shouldn't be a doubt after Friday's performance. Friday's market was weak, and I think that threatens to unleash additional selling from multiple sectors of the trade. You got technical traders looking at the markets and seeing a bleak performance and believing that it's time to begin the next leg down. So I think you're going to get building selling energy there. You got fundamental traders that can't see anything bullish on the horizon, and that's a legitimate argument. And the market has paused and tried to stage some recovery. It did have a nice rally in beans, but I think that phase is over. The holiday market is typically not a good time to start new uptrends, and you still probably have people looking to unwind commodity positions in anticipation of a tapering by the Fed, which they have a meeting this week. We could find more information on that later this week. Whether they taper this week or this meeting or the next meeting, I think is really irrelevant. Large commodity investors have been expecting for months that the Fed was going to taper. There's been unwinding of long positions in all commodities for an extended period of time. And I think that anything we get from the Fed tapering is going to be just confirmation of what they already know and believe to be true. So none of that's going to be friendly. So when you look at it, I think everything is pointed to some level of weakness. If we get some corrective bounce, just because maybe we were down too much on Friday and a late rally in beans on Friday, if there's some follow-through buying type of activity that occurs early this week, it's going to be relatively minimal. You get corn, 5 cents higher than where you finished Friday. You got selling from multiple sectors of the trade. You get beans up 5 to 10 cents from Friday's finish. You're going to have selling that coming at you from multiple sectors of the trade. I think overall you're looking at a situation here where it's not pleasant. The market's going to continue to unravel weakness, and the concern here is that we could continue to unravel weakness and have a soft tone going all the way into the very early spring period and get the markets a lot cheaper. Too cheap by all standards, but it doesn't matter. That's what can happen, and that's what I'm concerned about, and that's what I talked about last week. And I think that in the case of beans, there's a very strong case to be made that producers should be aggressively pricing their beans, getting protection on, making cash sales, whatever it is that works best for your operation. But you always run the risk if you make a sale in beans right now at this time of the year that as soon as you make the sale, all of a sudden the weather changes in South America, you get a production concern, and you get some nice rally that you missed out on because you made the sale. I understand that concern, but when you compare that risk to the risk of just holding inventory, I think you're looking at least $1 of downside risk, and right now I'm far more concerned about that than I am missed opportunity because you make the sale. So like I've said all last week, and I'd say it again, seriously look at protecting your prices that are offered for old crop bean inventory. In the case of corn, nobody likes the current price. We did get a 20-some cent rally here over the last couple, 3 weeks, but considering how weak the market had been and considering how short the market was, there should have been a better opportunity for a better rally by another 20 or 30 cents. That didn't happen. I think the window of opportunity to get a bigger rally is pretty much closed. So right now I think producers are looking to make sales You look at your cash bids, and there's some good cash bids, good basis levels, and I think that makes an argument that you should be making some cash sales using the DPP to search for the best bid. I think there's a strong case to do that. I think you also got to be concerned that when the market looks forward, all they see is bearish things. They see bearish adjustments to last year's crop. They see large and growing carryout for next year with just using basic acreage expectations and a normal yield. It builds carryout. So we got a lot of time here in front of us that we might be trying to absorb a lot of bearish sentiment. And if, I don't think we're dealing with a corn market that has 5, 10, or 15 cents of downside risk. We're probably dealing with a corn market that has, possibly 50 cents of downside risk by the time you get into spring, and conservatively 25 or 30 cents of downside risk between now and February. And if the market breaks,